November. Opening bell just kicked off. We're at 435.63 on the SPY. We're at 371.67 on the Qs. Pretty ugly day to finish the afternoon yesterday to close things down. We had a 30-year bond auction for the U.S. that didn't go according to plan. We also had Jerome Powell giving some comments where, well, he just said the same thing he's always said, which is just trying to jawbone the markets down and just say that the Fed is willing to raise rates. Maybe it's not restrictive enough. All that good stuff. So let's get started. Risk disclaimer, know there's risk in trading. Please know it's use trade capital only. You know the deal there. Follow me out there on social media. This is the best place to find me, youtube.com/Chris Pulver. Verified account on Twitter at Chris Pulver. Facebook, same thing. Try to keep the handles the same. So that's it. But check out my video series and stuff on YouTube. I've got a ton on the playlist with Trading 101 video series and keep it seriously simple. I just posted one yesterday for my Trader's Path to 100 playlist. That's Trader's Path to 100%. So check that out. That is dropped yesterday around like 6 p.m. Eastern time. Let's go to the charts today. So we're trading at 435. I had an assignment that I wasn't real happy about, which kind of throws off my little positioning from the 439, 437, and 441. And now I have long shares of the SPY. What is in my best interest to do at the moment is to close out my 441 long put and also close out the well, probably just the 441. That'll be the best one as far as value goes, and then keep the 437 or just close the whole thing out. Let me see what that looks like right now, actually, and let me log into YouTube and say good morning to everybody. Let's jump in. There we go.
Before Course Hero.
Okay, good morning, everybody. FK, good morning. Donna, good morning. Ann, Angela, Perry, David, Donna, Jacob, Chris, what's happening? Peter, good morning. Denise, good morning. Willard, Don, Larry, good morning. Yep, same thing, Larry. I'm right there with you. And my account status is closing early. Right. So, Larry, you're probably in the same boat. I mean, with a $36,000 account, I'm not taking 200 shares or 400 shares of the SPY. So I need to close it out as well. I had the day to settle it. I mean, I can show you right here. It shows that I owe. I was assigned 400 shares of the SPY and 200 shares of Pfizer. There's my Pfizer. There's my SPY. I was assigned at 439. So what I'm going to do is come into my long puts. I'll blow this up a little bit and show you. Okay, so let's go into account. Let's go into positions. And what I might have to do is close the shares and the puts at the same time. So I just want to make sure I did it correctly. So I have the 441 put and the 437 put because I was assigned at 439. So this should be 2 and 2. You can see these are both in profit. So if I close these down, it's going to be interesting to see if it lets me close this down with the shares. Let me see what I can get for this. So the real value right now, I'm going to move this over here so I can look at the actual market price. So we're trading at 435.04. And it's going to be somewhat volatile, but we'll see. So 441 minus 435.10 roughly. So 590 on one put. I'm going to write that down. So the 441, and then I have a 437, and that's also going to be worth about $2. So I need to make sure that I can get, if I close both of these together, I'm looking to make sure I can get around $8 or so. Right now, showing this trading at right around $8. So we're at 20. All right, let me see if I can get $8 for it. Now it's showing 805. Let me see if I can. And again, it's going to move pretty quickly. I'm going to try to go on the high side of the mid price. And if anyone's just like, what is this guy talking about? Right here. So I've got the bid, the mid, the ask. I'm going to try to get at least the mid price on this and try to get maybe 5 cents more to give me a little bit of window. So I'm going to try to go maybe 810 and see if it'll close those out. So 810 is pending. Let me do the math really quickly on those. So that's about right. Okay, that just closed out. All right, now I can close down the shares and get my buying power back. So close down the shares and it's already slipped about 10 pips, which kind of, or 10 points. So let me see what I can get out of this. I'm closing down all the shares. 06, 08, 07. Come on, baby. Give me some. All right, we're slipping quick. 435. See if I can get a pop up to. All right, we are slipping a little bit lower. I'm just going to keep massaging the price on here and see if I can get. I'm trying to get out at 435. Just closed out at 435. Okay. So just take a look here. It shows that I no longer owe, right? This is more of my account balance. There's my margin. I'm also going to dump the shares of Pfizer, which I have 200 shares at 40 bucks. I'm going to get that back and take the small loss on Pfizer. It was a 40 by 39 or 40 by 38. So I still have that long put. But I took care of that butterfly spread. And now this one, the 439, 441, 439, 437, this one has been assigned early. So I'm going to delete that. So there is potentially a gap in the armor with these butterfly spreads. The rest are open and running. And if we have price settling in this area at all today, by the end of the day, the butterfly spread pays really, really well. This was a 6-to-1 right here. The 435, so this one has been dumped. The 6-to-1. The other one I have in the middle is in the 430s. This is a 9-to-1 right here. So if I have it, staying where we are today at 435, maybe pushing down to that 433, maybe filling the gap at 431, ideally that's where I would love to be today. If we come up here, then that's not great because I was assigned, and it's kind of unfortunate that I was assigned early, but I'm going to get rid of those shares. So to Larry's point, hopefully you know how to take care of these assignments. We talk about it in Equities on Demand. With the butterfly spread, I was assigned long shares at 439. I had a long put at 441 and a long put at 437, both of which were in profit. Okay. All right. So now, and what I might have to look at today, I don't know if this is going to be good or bad, but I'm going to take a look at it. If I did well, I'm kind of do this. I might consider doing the same thing. I don't think they're going to assign me if I do it again today. If I take the position, I don't think they're going to assign me as I take it. So let me go into trade, see what this looks like from a single day expiration. So if I sell 2 contracts at the 439 and I set this up with puts, I'm just going to look to fill. I'm going to look to fill the gap again today. This might be more expensive to take the trade. 439 by 437 by 441. I can take it for about 30 cents. The max risk 32. I mean, it's roughly a 5-to-1 if I get it today. So if price comes back into this area, I mean, I still think this trade's solid. The spread's a little bit wider than I want it. But if we end up coming back up into 437 or higher, I need to fill this area. And to me, a butterfly spread's the best way to get it. So let me see. We're at 28 cents right now. If I did, I'm going to try the same trade again. So 439 by 437 by 431. See if I can get filled for 20. Let me see, 29 cents. It's going up a little bit. 30 cents. Oh boy, now it's at 35. Holy shnikes. That didn't take much. Come on. One at a time. 32 cents. All right, I don't feel like chasing this thing, but I'm going to try to get 32. There we go. All right, filled to 32. So I'm back in the game. This is about a 5-to-1 now, right here. And we'll see how that plays out. So that way I can copy and paste that. All right, so I'm back in here filling this area with the trade down to 437. All right, so that area is a 5-to-1. And then, like I said, if we stay below 435, 434, fill this gap at 433 to 431, this is really where I have potentially two butterfly spreads that can pay a 6-to-1 and a 9-to-1. So again, that's towards the end of the day. I'm probably not closing these trades out until 3 p.m., 3:30 p.m. Eastern time, and I'll look at the bid prices. Larry, you don't have the long puts. Why do you not have the long puts? Where did they close the trade out entirely for you? Like they assigned you the shares and closed out the long puts, so everything was exercised on your behalf? Because if that's the case, you still had the original risk on the trade, which would have been what did we take the trade for? That was traded for like 30 cents. That's the max risk on the trade. So if your broker assigned and closed out the puts and exercised, they might have just done everything for you. But if you were assigned and you're assigned long shares, you don't have puts to go with it, then I feel like you didn't take the trade with me the same way. So this is what I was. So 439 right here. We did a 39-cent debit. So my max risk on that trade that I just closed out was 39 cents, and I just got back in for the same trade at 32 cents, I believe. 32 cents. Yep. So I'm going to keep an eye on that for the rest of the day. You have 439 by 431 strangle. Okay, so that's what you have running. That's fine. And right now that's not looking great either. We're at 435. Unless price gets a rip up here to 440, that strangle is going to be not looking hot this week. We didn't have a lot of volatility. We're still in that like $6 to $7 window for ATR for the week. It's been very quiet. A lot of noise. We have CPI next week. So what I'll probably do next week is do a strangle, but I'll double the contract size. I think we have enough volatility to expect some movement next week, so I'll go after that. But butterfly spread should be pretty profitable by the end of the day. One of these butterfly spreads will be profitable, and the nice thing is I'm not carrying any of these over the weekend. So by today, wherever price is at, I don't think price is going to be up here. I don't think price is going to be down here, which means all of these butterflies, one of them will pay. I have a couple of overlaps in here, so if we get to like 433 or 432, there's potentially two of them that pay, which would be fantastic because they do pay pretty well. So I'll monitor that and manage that for the rest of the week or for today. Okay. All right. So let me move off that for a second. Let's talk QQQ. Interesting change of events, right? I mean, the Q's pushing up versus the SPY just kind of hanging in there. We had a much bigger sell-off yesterday on the SPY than we did the Q's. I just think it continues to be like the Mag 7 enormous 8, keeping things resilient. If you want to see where the broad market is, check the IWM. That's the Russell 2000. So when we start equities on demand class at 10 o'clock, I do have a couple of trades that I put in. They didn't get filled yet. They're pending orders. I did a 164 by 163. I think you can see those in here. Yep, I did these yesterday afternoon. I was going to talk about them today in class because I knew they weren't going to fill. So the 164 by 163, these are bull put spreads. I'm trying to get 50 cents, which means that I want to see if the IWM will come back. We're at the gap levels right now. I could, well, I don't love the levels, but I could take like a 169 by 168. I think I might look at that right now. Let me see something here. And the reason I would consider the trade, 169 by 168 is if we use this gap as support and we put in a low, this is the low for the, potential year. Like we draw down here, we had this big rally last week, come back and find this, we may only pull back to the gap. That's 167. To fill the gap is 166, just under 166. I know that we have CPI next week, and that might be, what offers that dip. So I'm curious what a 169 by 168 looks like right now. Another one that may be assigned, I'm not really sure. Obviously, I don't want to get assigned and keep the shares, but I think that if we're going to see a broader market move to the upside, Russell's a good way to play it. I just want to make sure we get enough premium for it. So if I did a bull put spread and I sell, if we went out to, I'll go to a couple of Fridays. So the 17th, the 24th. Let me look at these. So the first, and I did the same thing. So on these trades, we'll talk about these in class. I went out to 12-1, 12-15, and 12-19. Or I'm sorry, 12-1, 12-15, 12-29. But if I did them right now, I look at a different leg. So we're trading at 168.30. If I did the 12-1 and I went out to 169 to 168, I'm 75 cents in the money from that sell strike, and I'm only getting 45 cents for this trade. I don't know. I kind of hate it. Let me see if I can just look at a call option. So if I buy a call, let's look at something for the end of the year. If we rally for the end of the year, and again, we got to get through the holidays. The 169 isn't at the money. If I do something slightly out of the money, let me look at the delta situation here. So IWM, let's take a look. If I just did, I'm just going to add a separate trade. So if I just did something for the end of the year, I know I'm paying for time premium. We're trading at 168 and change right now. If I buy a call, I can buy a 170 call for $4. This high was 175. I mean, that's essentially what I look to get back to, right? If I buy a 170 call and we got up here to 175, that does make that call pretty profitable. If I want to make this inexpensive, I can do like a 172 or 173 call. That might be a little bit cheaper. It's obviously going to have the extra risk, but let me look at the delta. So if it's a 170 call, that's a 48 delta. I'm going to go a couple strikes out of the money. That's a 41 delta. Looks like a 175. That's a 30 delta. That's a little bit better. I think I'm going to do that. I'm still paying for it. I'm risking $2 on the trade. Let me see if I can go 27 delta for $1.70. I'll risk the extra 25, 30 cents. So if I buy, we need to see if we can get this thing to rip up here. So that's 4% on the IWM by the end of the year. If there's any bull market that we're going to see by December 31st, this is one way to play it. And it'd be a call option. The max risk is going to be what I pay for the call option. So if I just did one contract at the 1229 expiration long call at 175, I'd pay $2 for it. It's a 30 delta. I can go out to one strike higher, pay a little bit less. But now I need price. I mean, I need price to get to this high, 175 and change. I can do the math on this at a 30 delta. If we have a 7, so 175 minus 168.41, that's 659 in movement. If I do that with a 30 delta, I can expect $1.97 on top of the $2.10 I pay. So if I take the trade for $2 or $2.10 and I get up to these highs, that long option should be paying $4 and change, $4.07. So I could buy it for $2.10. I could put a limit credit in at $4.07 or $4.10 and essentially go after 100% gain on that call option. So this is trading at 208, 207, 206. I think I'm going to take that trade. What? Okay, now it's trading less, so 203, 204, 205. Let's see, buy to open. I don't like how that looks, so I'm just going to do it this way. Buy to open 1229. I'm going to do the 175. That's trading under $2 right now. And obviously we might come and fill the gap, so I could get this a little bit cheaper. Here's the deal. I'm completely taking my chances on this trade. If price goes down here, that call option is going to get worse and worse and worse. If price goes up over the next couple weeks, this gets better. So I'm going to take my chances on, if it's 202, see if I get filled at 202. So 20, I'm going to try to get $2. So one contract, $2. See if that'll take on the IWM. That filled. All right. So I'm adding that into equities on demand. If you want to take the trade with me, we'll talk about it today in class, but I'm going to take the trade right here during the YouTube session live. This is just going to be a long call option on the IWM. versus trying to get cute with the credit spreads, which I have them pending. But I'm going to go IWM. The expiration is going to be 12/29, and I am doing the 175 long call. I paid $2 for it. It's a long call debit. Filled right here. IWM, long call, $4 credit or better. And we have until the end of the year on that one. Okay. All right. Killing it. Very nice. There you go. Sounds like a good week, man. I like it. Okay, let's do some other charts and analysis. I'm going to put this on here. So that strangle paid really well last week. That traded up to like $4, $5, $6 in credit. We only paid $1.76 for it. That was last week though, so that's done and over with. For profit, I'm going to add this in here on the chart. This is the 12/29 expiration 175 long call. And I paid $2 debit, $4 credit or better. So if we hit 175 or higher, based on the delta move right now by taking the trade, that should be trading for around $4. And I would like to get there well before 12/29 if possible. If we get through Thanksgiving, we have a little bit of a rally. That's good. Maybe if this happens over the next week, if this thing's up, $100 by next week, and I take a 50% take profit, I can do that too. So that's kind of the nice thing about some of these long options is you can, close out as early as you want, but these profit levels, the faster price moves in your direction on a long option, the better your profit potential is. Okay, let's take a look. I'm going to take a look at the robots this week. Perfect Storm Pro is up 289 for the week. The original Perfect Storm is up 80 pips this week. So just hanging on to some trades. Pockets Pattern Pro is up 216 for the week. Okay, so I have 216. I'm just going to add this up. So pip wise this week for some Forex robots, 216 on Pockets Pattern Pro, 80 pips on Perfect Storm. That's the OG one. And 289 on Perfect Storm Pro. So 585 this week on some robot trades. I'll add that into my flex doc. And we still have some trades running. I'm going to take a look at the DXY. All right. If you join me on Monday and you join me anytime in the last 3 weeks, this is pretty much what we've been talking about. So look at where we are with the dollar, right? This is not the best spot to have a decision. Now, CPI next week could be, and again, this is the dumbest analysis ever, but this is what the reality is. CPI next week could be that. I don't know what it's going to be. Okay. The pain trade, in my opinion, is that the dollar continues to stay bullish. That's the pain trade because everyone is looking for risk appetite, but at the same time, well, I take that back. Maybe the pain trade is that the dollar just dumps and we get this big risk on rally, and everyone that's like, "Where's the recession at? What about the bears? What about?" They're getting, I don't know, they're getting screwed over. Plus, the pain trade is also yen weakness, and to get stronger, we have risk off or risk on trading. So the dollar gets weaker. If the dollar gets weaker and the yen gets weaker, the Swiss gets weaker. You have the Aussie, the Euro, the Pound, the New Zealand, the CAD, all those pairs that can rally. You've got the stock market, ready to rip for some holiday trading, if possible. Look at where we are. This move going into next week, I hate to say it, but you're literally talking about a trade that could be up here, down here for the week. So how do we position for that? The same way I've been doing here. I'm going to get some butterfly spreads going, get a strangle going, and see where the volatility falls. And we're going to find out whether this market's capable of getting back up to these highs. I think that by the end of the year, if this market's going to be bullish, we're going to come back and retest these highs from July. If the market is bearish, then we rip all the way back down here and fill those triple gaps, and we possibly come back and test the lows. I don't know. I mean, is anybody offended by this outlook? Because that's truly what I think we have to look at. I mean, could the market do this and do absolutely nothing for the next couple of weeks? I guess. But there's a lot more volatility likely ahead. CPI is going to be a big thing. I talked about this in my Trader's Path to 100% yesterday. I just did a little overview. If I go to the U.S. inflation rate, this has been trending somewhat higher from these lows. So we had lows down here. We've been trending a little bit higher. And, I understand that we had a high here. We made a lower high, but is it this? Where it's like we had this big correction in inflation, a little bit of a head fake, and then we just start going back lower. That's possible, and we could have a better improvement. Do we have a forecast for CPI next week, or is it keeping us in the dark on those calendars? Let's check those economic calendars. So this is going to be next week, Tuesday, Wednesday. It's going to be PPI, CPI. Tuesday, CPI. Okay, so year over year expected to be 3.3. And the last print was 3.6, 3.6 forecast. So we had 3.7, 3.7. Now it's forecast to 3.3. Okay. So that is a good thing that the market consensus is forecasting lower. So we had actual print 3.7, and the forecast for this next week is 3.3. I would say if we come in, at 3.3 or better, meaning like 3.3, 3.2, 3.1, then that gives the market a reason to rip to the upside. So I'll just kind of make that as a pseudo prediction for next week is if we print 3.3 or lower, then the market has a reason to rally. Because what does that mean? It means that inflation is improving and the Fed can stop threatening rate hikes. They can just continue to pause cycle, which December 13th is still like a 90% chance they don't do anything. They just pause, right? So here's your CME watch tool. Do I think the Fed will hit the inflation target of 2%? Not anytime soon. I think it's a long ways away, to be honest. I think something's going to have to break before we hit 2% inflation. And I don't know what it is. I mean, everyone wants like an inflation trade again, like we had in 2020 and 2021. I mean, even early 2022, we had some inflation trades. I just think that it's changed. I mean, oil's coming back down, kind of facing the recession. Global slowdown. China's not saying anything. The U.S. has put way more stimulus in the economy than China has. So here's your December Fed meeting. The probability is they're going to pause. So the Fed's going to stay this higher for longer. They're going to keep talking it down. They're going to keep saying that maybe it's restrictive enough, maybe it's not. They'll talk out of both sides of the mouth, and the market doesn't really know what to do. 2% is a long ways away. We are in a way different environment than what we've had the last 20 years. So inflation, and it's really due to supply issues. I think that's why the inflation thing could be a problem is supply is so short on so many things that's ultimately where inflation rears its head again. That being said, though, I mean, tech-wise, we have deflation in the tech environment. That's the whole point of tech. I mean, AI is supposed to be a deflationary pressure, right? Everything with AI, everything with automation, everything with improving assembly lines and autonomous vehicles, that's supposed to be deflationary. I read something about actually having human quality robots where they're the ones that are going to be like line workers. Right now they cost I don't know $125 or $150 a robot, and they're going to end up being like $10 to $5 a robot. That might take 5 or 10 years, but that's technology and deflationary pressure. So it just depends. I mean, I think that shelter, oil, gas, energy, food, that inflation's not going away. That's probably the stickiest inflation that we have. But tech and other stuff, we've been in a deflationary environment for the last year because there's a reason we went from 9% down to 3% because we essentially had deflationary pressures. But like I said, core inflation and that kind of super core inflation, that's where the stuff gets sticky. I think that's going to be a hard battle to get things under control. We might have to have some fragility in the job market. We might have to have some cracks in the real estate market. If that ends up happening, then sure. Shelter prices come down, rents go down, housing prices go down, affordability goes up a little bit. If rates come down, people start buying houses again. If rates come down, people start refinancing again. So this is all months and months away. So to answer the question, I mean, 2% is a long ways away, but with appropriate weakness in the economy, then yeah, inflation can be down because people will stop spending so much freaking money. You know, they'll start scaling back and realizing like I can't buy a car at 9% interest rates. I can't close on a house at 8% interest rates. It is unaffordable to do that. U of M numbers were lower, 60 versus 63.7. Inflation expectations 4.4 versus previous 4.2. Interesting. That was for today, right? That was at 10. No, usually that's at 10 o'clock. Oh, I guess I'm running late. Let's go Friday. 4.4. So the previous is 4.2. Interesting. Okay. Well, like I said, we have CPI and PPI next week. It's going to be a mover. I mean, this week all overall was pretty quiet. For the day, I mean, look at the weekly candle. Then I'll wrap it up here for today's session. Look at the weekly candle, by the way, just really quickly. I know I've got a bunch of crap on my chart, so let's just look at the actual candlestick. But look at this week's candle. This is not a big move, right? So, I mean, I'll say this. Look, inflation numbers next week. Does the market give a crap to break out up or down? I mean, one thing we can get through is we have Fed, we have non-farm payroll, we have inflation data next week. What else really is there? As far as the U.S. markets are concerned, we still have some earnings that are going to get sprinkled in. We've still got another, a few thousand companies over the next couple of weeks to sprinkle in earnings. Interest rates are going to be paused, and earnings for the most part have been solid, right? And if they remain solid, maybe that's enough to kind of lift the market. I mean, think about this. We have an indecision candle for this week. Do we have a breakout coming? And if we do, is there room for that breakout to run one way or the other? By the end of the year, are we going somewhere? Again, I will be positioned for this. It doesn't matter if I say it's going up and then it goes down. You know why? Because I'll position for both. So just because it's a coin flip. Yeah, it kind of is. But I know that if it goes up, I want to make money and I can be more aggressive on one side once I believe we're going up. I could be more aggressive on one side once I believe we're going down. But right now, I'm going to position for neutral, right? And so next week, I mean, we could push up here and have the holiday drift to take us up to the highs for July, or we can break this indecision candle and we come all the way back down, and all we've had is a roller coaster ride, down to up, down to up, down again. And people's heads are just going to be spinning, but here we are just trading it. So I'll be watching and I'll position for it. So next week will be a big week. It's important to watch, and I think once we get through next week, it gives the market a reason to justify whether it's going to go somewhere for the rest of the year. Because once we get through, I mean, look, next week is our final week of trading before going to Thanksgiving. Once we get into Thanksgiving, holiday trading, from end of November into December, really there isn't much that's going to disrupt. It's just going to be trade what you see. You already have drifts, you have breakouts, you have trends. Follow the trends. There's not going to be much on the other side. So that's my thought. And I know it sucks. It's like it's a Coinbase or Coinbase. Yeah. Hey, shout out to Coinbase. It's a coin flip, but I want to position for that. I will position for the up or the down, and I'll position for the sideways. And then once we have a confirmation up or down, I can be more aggressive and see where those lead because yeah, those are targets, right? Bulls can target this high, bears can target this low. We can position for that. But in the interim, I'm going to position for what the markets do on a high probability basis week to week and see if I can get paid with a high, asymmetry trade. So, any trade for today, for example, 9 to 1, 10 to 1, 20 to 1, 6 to 1, 5 to 1. I might lose on the strangle this week, which I think that it's in our best interest to close it out for equities on demand because we might be down like 50, 60% on that position. So it's probably worth closing because we're probably not going to 440 today and we're probably not going to 431 today. So if we have any value left in the middle of it, we're kind of in the worst position. But we close out the Q side for profit, and we had a couple earnings trades this week that were profit, so we'll check on those as well. Okay. All right, so I'll do this. Thanks for watching today. If you do me a favor, hit the thumbs up button before you go. I appreciate that. Support the channel. Everybody that comes and watches live or watches the video, if you hit that thumbs up button and saturate it, this video and my live sessions and any other video that I post that comes out from me in this channel, it gets out there on the search bars for a lot of people. So I think this information is hopefully helpful, and I've really never heard a lot of terrible feedback on these sessions or this analysis. And I'm in the markets with you, I'm trading with you, so I'm giving you as honest of an outlook as I can. I don't know what the market's going to do next week. I don't really care. I know how to position for it. So if it goes up or down or sideways, we can make money. That's my job. Right? So we'll see what today gives us. Not that it's going to be anything exciting, but next week with CPI and PPI, there's going to be a reason for the market to give us some volatility. I want to trade that, of course. And then once we have some better direction and confirmation, I'm very curious to see if we have a holiday drift the rest of the year. One way or the other, we're going to get something. Okay? All right, sounds good. Okay, I'll let you go for today, Equities on Demand students. I'm sorry that we're running late, but I'll jump right into the trading room and let's talk strangle. Let's talk our butterflies. And if you still have the assignment from the SPY, I've got to get rid of Pfizer. I was assigned at $40, so I'm going to get rid of that. And we'll chat soon. All right, everybody, thanks for watching. Thanks for hitting that thumbs up button. And we'll be back on Monday for more Poll Report, kicking off the week at 9:30 a.m. Eastern Time. And like I said, Tuesday, Wednesday, big news out of the U.S., more earnings next week. And let's see what the markets want to give us. All right, thanks everybody. Have a great Friday, great weekend. I'll see you soon. Thanks, bye.